Has Trading 212 got what it takes to handle your investments? Let's take a look as we break down Trading 212 as a company. Welcome back everyone, my name's Paul. If you've never seen me before, I've recently started investing and I'm using Trading 212 as my investment app. If you've seen any of my videos before, you'll know that I look into Trading 212 as often as I can to see if it's a good place to put my investments. When I first started, I went to Hargreaves Lansdown. That was my investment platform because it's the most popular and probably the safest platform out there. Hargreaves Lansdown has been going for years, so it offers that element of safety. However, I quickly got a bit annoyed with it with very large fees and not a great app. It kept on failing. So when I found out about Trading 212 and its zero commission thing, I decided I want to try it out. Putting all my money into Trading 212 was a little bit scary. I didn't know anything about it, I'd never heard about it before, and I didn't know if it was safe for my money. I've made quite a few videos now to try and answer some of the questions people were asking me, some of the questions I had myself, like is my money protected in Trading 212? Or if Trading 212 withholds your money? I've tried to figure these out as systematically as I can and answer the questions as unbiased as I can. I really do want to know the answers to these questions because I have started putting a lot of money into Trading 212. I figured the best way of doing this would be to just look into Trading 212 as if it were one of my stocks. So I try to focus on any news that's come out, I try to figure out if they make money, and I want to figure out if they're making any big mistakes. So today I've got a hold of their recent tax filings, so I want to go through that, see if there's any problems in there. And towards the end of the video, I'm going to see if there's any problems going on. You might want to stick around for that one because there might be a big boo-boo that could affect anyone that's in an ISA. I'm serious, I don't think this is clickbait. I think there might be a real problem there that could affect a lot of users. And just to put it out there, I'm not sponsored by Trading 212. They do their affiliate link, which I'm part of, but I've never had any contact with them. I can say whatever the fuck I want about them, and I promise you I will give you the best and most honest assessment that I can. This is not financial advice. I'm just trying to give my opinion on Trading 212. You guys need to go out and figure out if any of the other platforms are any good for you. Hargreaves Lansdown and Trading 212 are the only two I've ever used, and they're the ones that I'm stuck with. So today I want to go through Trading 212 as if it was a stock, or as close to it as I can do. And for that, I'm going to try something I've not tried before and go have a play on the Lappy 386. Okay, so I found Trading 212 UK Limited on the company's house site. It seems that the UK side of the business is different to the Bulgarian side. I have really tried to find the Bulgarian side of this business and its tax filings. I'm at a loss. I don't know what to do. If anybody out there knows where it is, or they can find the Bulgarian company's house website, let me know because I can't find it. I think it's just because, I don't know, I'm xenophobic or something. I just can't do it. I can't figure it out. But today we've got Trading 212 UK Limited, and we're going to look at their filing history of their taxes. So when I'm trying to look at a stock, the first thing I want to do is try to understand the business and try to understand what they do. So let's go to their website. We find out at first that they're an investment company where you can invest with as little as £1. And a very important point that we can see right at the bottom here is 500,000 people plus have already joined. Now, if you checked out my last video on Trading 212, it was around 300 to 400,000, and I think that was in about February. So they've really increased their customer base recently. That's only positive news, I'm sure. And at the top there's a nice reminder that you can invite a friend to join Trading 212. I have a link in the description below, so if you're still thinking about signing up to Trading 212 after all the shit I'm about to just drop on you, then use my link in the description below. You get a free share. So when we scroll down, we find out that it's the UK's #1 trading and investment app, based on number of downloads. I mean, it's not the #1 investment platform. It's just the most downloaded. I feel like you could determine other things from that, but yeah, they are pretty much the most downloaded investment app. So that's pretty good, right? And then it shows you that you can use the invest feature, you can use the CFD feature, and you can use the ISA feature. Very important to know the difference between the three. I've done a video on CFDs before as well. Just remember for a little bit later that it's very important that you know the difference between the CFD side and the invest and the ISA side. So basically Trading 212 is a new investment platform that's trying to disrupt the market by being commission free and also being mainly mobile orientated. So now we know what Trading 212 is, let's get into the numbers and let's see if it's a safe company that I might invest in. So the first thing you come to when you look at their tax filings is the business activity and review. And this is the important bit where you need to discover that the CFD section is a little bit more important than the other two sides. The Trading 212 is broken up into two sections. It's got the CFD side, which is the contracts for difference. That's the kind of betting side. And then the other side is the stockbroking, investing kind of side. So enough of that, we need to get into the numbers because there's some serious stuff we need to look at. Okay, so we've got the income report right here for the end of 2019. We can see that this year they made 2 million in revenue and they've made 2,300,000 in losses, leaving them at a loss, that's why it's in brackets, of 306,890. So in 2019 they made a loss, which isn't good for any company. We don't really want to see that. But it gets worse because in 2018 they made 4 million in revenue. They had the same amount of expenses, roughly, but they made 1,800,000 in profit. That does ring alarm bells for me. How does a company lose 50% of revenue in 1 year, especially when it's growing so well? On the balance sheet, there isn't much that stands out. It's good to know that they've got a great cash flow of 5 million. They have to have that as part of their FCA requirement, so it's nice to know that they've got a lot of cash backed up. But as you can see, they have lost 300,000 equity, and that's come from that net loss that we saw earlier. From a stock point of view, I like to look at free cash flow. I like to see it growing year on year. Right now, we're not seeing that. We're seeing a net loss of nearly 1 million. As a sort of value dividend investor, I would like to look at good cash flow. I would like to see it increasing year on year. That really isn't good news. And if we were looking at this company from a fundamental perspective, this isn't what we would like to see. However, in Trading 212's defense, no debt. That's pretty good. How many companies do you know out there with no debt? That could put them in a really good position to weather anything in the future. I feel like that's a great position. If they feel like they need to grow a little bit, they just take on some debt. So looking at Trading 212's fundamentals, it doesn't look great considering they were supposed to be having a good year. They've got a lot of cash available and no debt, which is crazy good. But their business model, at least at the end of 2019, was working at a loss. That is a bit hard for someone who generally invests in very good companies, but for someone who's investing in growth, this would be a pretty good company to look at. The real thing that I couldn't get over when I first looked at this was the revenue. Why is the revenue cut in half? Trading 212 and their tax filings have explained their reasoning for this. They're telling us that their promotional activity in Q1 was more popular than anticipated and costs were beyond those agreed with the third party running the promotion. They're telling us that in Q1 their advertising was so good that they got way too many customers. That means they had to pay what I assume is the advertising company a little bit of a fine because they did too well. But they say that even though they had to pay that extra cost, the potential of the market to support the new product is set and well demonstrated. They're basically saying there that they've got proof of concept. The company does not see a short-term increase of profitability as likely. The immediate goal is to increase the number of clients active on the platform, while the medium-term move is from a transactional revenue to a subscription-based freemium model. Okay, it looks like we're starting to see where they want to go with this. It sounds like they're trying to move away from CFD as being their main thing and trying to move towards investing. However, the investing side of the business isn't profitable. And as you see at the bottom there, it's saying that it is the company's intention that the profit from the CFD business should support the growth of the share trading side rather than any external source of funding. So it looks like they're trying to support their investments with the CFD side. They're trying to move away from the CFD side a little bit and start focusing on the investment. It looks like the way they want to pay for those investments is by setting up a freemium service. I think you'd have to make your own decisions on that one, whether you think it's good. I'd like to see what product they've got in mind because they've released the auto invest feature, which looks amazing. I have my problems with it in the beta mode, but I reckon it's going to be really good once they've sorted it out. I honestly thought that was going to be a premium service. I really did. but they've released it for free and that's pretty awesome. Hopefully that's helped to generate all these new customers. I've always had my worries that the CFD side wasn't sustainable, that so many people lose money that they just never come back again. I'm wondering if that's the reason for the 50% loss in trading revenue. If I'm honest, I can't quite put my finger on it. It might be that they stopped advertising CFD and less people started using it. I just think it's a shame that at this point in time, the company wasn't profitable, and I really thought it was. So they seem to be the main highlights. They've still got a good bit of cash around, so that's nice. Their revenues are down, which isn't nice at all. And they didn't make a profit this year. Trading 212 staff on the community forum are insistent that they're still profitable after 15 plus years. I'm guessing they're not talking about the Trading 212 UK side of the business. They're talking about Trading 212 as a whole, as in the Bulgarian side of the business is still very profitable. I just can't find those numbers, so if anyone knows what's going on out there, just let me know. Show me where I can find them. That'd be lovely just to see what's going on. The key information that Trading 212 want you to know right here is that they are growing a customer base, and in the short term, they're not going to see profit. And I personally think that's a fair excuse. I just don't want to see multiple years of it. I'd like to see them being a bit safer with the old money. I know it's FCA approved, and I also know that the FSCS has got us covered up to 85,000, but I would still like to know that the company I'm investing in has got a future. So now we've looked at the fundamentals, which are a bit of a mixed bag. Let's have a look at what Trading 212 is doing to grow its business. If you thought looking at the fundamentals was boring, I'm about to bore you a little bit more. But trust me, it's important that you know this so you can make a fully informed decision whether you want to get into Trading 212 at all. You've got to be willing to trust your broker because they've got a shit ton of your money. It could be thousands. And if you've got a company that's going to be a problem, it's going to cause you a headache in the future. So the first bit is that quantitative analysis, looking at the numbers, checking if they're okay. At the moment, it looks like a standard growth company with no debt. Lots of people would probably invest in Trading 212 if it was on the market, regardless of those fundamentals. Especially if they decided that Trading 212 was going to become this amazingly disruptive investment platform, which it has the potential to do. As a user of Trading 212, I haven't had any problems really. I've had a couple of days when there was high activity and the app went down. That wasn't lovely. But as a long-term investor, it doesn't bother me so much. Perhaps if I was a day trader or something like that, that might bother me a little bit. But Trading 212 is being very clear that it wants to set itself up as an investment app. It wants to set you up for the long term. We want to find out what Trading 212 is doing to ensure its growth, ensure its new revenues, and if it's fucked up at all. First, we can see that Trading 212 is growing. It benefited heavily from this crash. It's gone from 200,000 users to over 500,000. And Trading 212 has been very clear that all of these 500,000 people have actually deposited. That's pretty good numbers, but I'd be very worried about the trading costs that incurs. It also incurred a lot more administrative costs because of this. It'd be a really bad thing if Trading 212 becomes a victim of its own success and isn't able to support its client base. However, Trading 212 announced in May, I think, that they were taking on securities lending. This should be a nice money maker. They can lend out the shares to other companies and make a bit of profit on it. Trading 212 was very clear that this could make things more sustainable. But as with every company, there's going to be some teething problems. And Trading 212 isn't immune from that. Aside from a couple of down days, Trading 212 hadn't had any major fuck-ups yet. But last month, something happened that may cause a big problem. Lots of us, including me, use their ISA account. However, some of you might not know that a UK ISA is restricted to certain stock markets in the world. And there are a couple of big ones that aren't available, such as the Shanghai market. Some of the big and popular companies of the world are based in China, which aren't allowed in an ISA. And this is where Trading 212 might have messed up a bit. Some of the big Chinese companies like Sea Limited and Kitoff Pharmaceuticals are actually based in China. You're allowed to trade them on the US stock market through a process called American Deposit Receipts. American Deposit Receipts, or ADRs, trade like a stock, but they're not the actual stock. When you buy that company on the US stock market, you're not actually buying any of that company. You're giving that money to an American bank who is passing that on to China. Your money's only guaranteed as a share or a unit by the bank. The bank has its own deal with the company in China. There are lots of famous companies available as an ADR on an ISA, like Sony or Nokia or Taiwan Semi or Ericsson. These companies are available to buy on a UK ISA because they come from an original company that has an accepted stock market. However, one eagle-eyed forum member noticed that TAL Education had gone. TAL Education is a Chinese education company. It kind of owns all the schools in China. This guy was looking to buy it and it's now missing. This caused Trading 212 to admit that they have found some problems with some Chinese stocks in an ISA, some that you might have bought. So companies like C Limited and Kitoff Pharmaceuticals, they're companies that will be removed from your ISA soon. Even if you hold them, you will be forced to sell them and your profits will go into your invest account. This feels like a much bigger fuck up than they're making it out to be. We're still waiting for guidance from Trading 212, but if you owned any Chinese stocks in your ISA, you will probably have to sell them. One of the big companies that I can't work out if it is connected or if it's not is NIO. NIO might be one of those companies that you hold in your ISA that you might have to sell. The repercussions of this on Trading 212, I couldn't possibly know. Some members have mentioned compensation, some members have mentioned fines. That doesn't look good if this problem gets really out of hand. It's worth saying here that I don't know for sure about NIO because it's registered in the Cayman Islands, but it is a Chinese company. I know Hargreaves Lansdowne doesn't allow it in an ISA. Either way, Trading 212 says it's going to contact each member individually to sort out the problem. That's the biggest news and the biggest problem that Trading 212 could be facing, at least in the short term. In my opinion, it could be quite bad news, even though they're playing it off as a bit of a whoopsie right now. So that's really the negative that I've seen about Trading 212. I'm just trying to be honest and show you how I'm trying to evaluate Trading 212 as a safe company for my investments. In contrast, there is a lot of positive news. Robinhood decided that it's not coming to the UK. I would say that that's because of the high competition that we've got here. The auto invest feature is really good. We haven't seen any real big problems in beta yet. And that's got to be one of the best investment technologies that's out there right now. To sum it up, do I think that Trading 212 are in trouble? Short term, maybe. But long term, they've got a lot of ability to generate some debt and really grow that business. It will give them a lot of time, if they need it, to work out how to make the business profitable. In the meantime, my investments are going nowhere. And in fact, I'm trying to double my investments by the end of the year. For me, Trading 212 is an excellent service. I've never had any problems with it, and I'm entrusting it with my money the same as 500,000 other people. I do actually feel like it's my only disruptive growth stock. I really do see it being a powerful force in the future, and that's why I've got all my money in it. It's also protected by the FSCS up to £85,000, so if it does go south, it'll be a bit of a headache, but at least my money's protected. Thank you very much for watching, everyone. I know that was a lot of information, but it's really important. Let me know in the comments below if you've been affected by the ISA thing. I'm still very much with Trading 212. If you wanted to start investing with Trading 212, there's a link in the description below that will take you there and you can sign up. If you sign up through that link and make a deposit, you can get a free share that may be up to £100. It's all at random, so don't blame me if you only get one that's a tenner. And if you wanted to talk to more like-minded investors, there's a link to the Discord in the description below. That's a chat room that has about 1,700 to 2,000 members now. I can't believe it. It's so big. There's so many people chatting about different types of stocks, not all dividend investment. There's a lot of growth stocking in there. There's even day trading, all sorts of stuff. It's really good. And while this video is not financial advice at all, if you did find it helpful, please feel free to like, subscribe, and invest.